Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is a special edition of Market Today where our focus will be on the earnings from Q3 basket. And now we are seeing Anand Rathi Wealth reporting its Q3 numbers. Solid set of numbers right there with the total revenue coming in at 140 odd crore rupees. There's a jump of about 29%. The profit after tax has grown by 35% odd to over 43 crores this time around. The AUM or the assets under management have also seen a bump up of 20 odd percent this time around at over 38,517 odd crore rupees. Now to discuss more about the earnings fine print and the outlook going forward, joining in with me is the company's top management. Mr. Rakesh Rawal joins in. He's the CEO of Anand Rathi Wealth Limited. Mr. Rawal, welcome to Business Today TV and thank you so much for taking the time out for this discussion. Congratulations to you on a solid set of numbers and a happy new year as well. Let me kickstart by asking you if you could name some of the factors that really helped you drive this kind of a growth in this quarter, and has the growth come in line or better than your own expectations?
Firstly, thank you for having me. A very happy new year to you too. See, the entire business is structured around trying to meet clients' objectives of 12 to 14% return. And if you need to get to 12 to 14%, there is a certain proportion of monies that you have to have in mutual funds and MLDs. And therefore, as long as assets are keeping, you keep positioning the assets in that direction, the growth automatically comes. So we've been doing the same thing this quarter, what we did last quarter, and the rest, of course, is the arithmetic of the numbers.
Right. If you could also help us know what have been the client additions like in this quarter, and going forward, what is the outlook here? Also, what type of clients are getting added incrementally? Is it the HNIs or the retail clients? And in case you can also mention if the existing clients' wallet share has also been increased in this quarter.
Yeah, so the answer to a lot of that is that yes, we've had a robust growth of client additions. Overall, 18% growth in client additions. Our positioning of our business is for clients which are ranging between 5 to 50 crores of wealth. Yeah? So the clients that we've added are in this segment that is 5 to 50 crores significantly. And I think going forward, we'll continue to do that. Is there any other question that I missed out?
So basically, I just wanted to understand if the wallet share of the existing clients has also seen a rise.
Of course, that's increased significantly for us. And see, the point is that it's not that for many clients, you have all their monies with us. So as and when the performance of the portfolios is meeting clients' expectations, they are bringing monies from outside and placing it with us. So wallet share definitely has increased for us.
Okay. If you could also highlight for us in terms of verticals performance, how has it been this time, the revenue mix for you, and also geographically, has there been any more penetration for you from the existing?
Well, I think the revenue mix continues to be of the order of about 40% from mutual funds and 60% from MLDs. That mix has sort of retained itself. And as far as geographies are concerned, the smaller branches that we had are growing at a rate faster than the larger ones. And therefore, that mix is changing, but ever so slightly, because the fact is that a large business for us comes from the metros. However, the contribution to small branches is becoming more and more significant.
Okay. Also, if you could help me know what is the outlook for the entire year, FY23 as a whole, in terms of the top line and the bottom line. And there was a guidance, if I believe, there was about 150, 155 crores kind of a guidance given. Are you going to be upping that guidance also?
Yes, we believe that we should deliver closer to 165 crores of PAT this year for the full year. as well as the revenue in the range of 520, 515 or so, around that.
Okay. Also,
So,
I am looking. Yeah. Yeah. Please continue.
so we've upped the guidance from what we had started the year with.
Okay. Also, I wanted to understand from the, press release that is there in front of me, the finance cost has been incrementally increasing from the last year-on-year basis and quarterly basis as well. What is that on account of? And on the expansion space, are you looking at, raising any more funds for perhaps mergers or acquisitions and any more expansion levels?
Well, I think so far what we have is organic growth. And we believe that that will be the mainstay for growth for us. Organic growth can lead to 20-25% growth for this business for many, many years to come. However, we'll always be open for any kind of inorganic growth opportunities that might come along. There's nothing today which is cooking. So as
Any
and when that happens,
any
we,
fundraise plans as of now?
no fundraise plans.
Okay. Also, when we talk about the overall growth that the mutual fund industry has seen over the last few quarters, that has been substantial. The SIP growth has been on a record on a monthly basis too. So the flows have been quite strong, and that forms a larger chunk of your own, business as well. Going forward, what is the outlook right here? We have been speaking to a lot of analysts who believe that this year, 2023, could again be a year of no return or a low return. But despite that, do you believe that mutual funds would continue to see the growth that they have been?
Well, time will say whether it's going to be low return or no return. It all depends on how profits grow for companies. And my own feeling is that next year will be a good quality return for equities. Uh, so I don't see the flows really reducing significantly because equity is not a one-year kind of investment. It is for a longer period of time, and the longer period returns are related to how the economy is doing and therefore what kind of opportunities it throws up for corporates to grow. My own feeling is that we are in for a huge upswing in the economy over the next 5-10 years. That will mean opportunities for corporates and growth of profits. And my belief is the markets will also be in line with that growth.
Okay.
I'm not at all for next year.
Okay. Most of the asset classes felt the heat of macroeconomic concerns this entire 2022. In this entire year, how did you maintain the asset allocation to help your clients still generate alpha, protect their capital, and to continue to be on the profitable path? And going forward, what is your outlook going to be on the various asset classes, starting from equity?
As I said, that if the question that I ask myself is that, hey, I started the year with 12 to 14% return expectation as a client, right? I may not have
Yes.
got that. Maybe I got about 6 to 8% for this year so far. Now, am I going to start the next year with a 12 to 14% expectation? And if so, my strategy will remain the same. So the point is that if you embark on a journey of 12 to 14, an asset allocation is a outflow of that objective, right? And therefore, if you believe in that objective, you will believe in the asset allocation and you will put your monies accordingly. And that's what clients have done. And my belief is that they will continue to do so. As regards various asset classes, my own feeling is that with inflation cooling off, the pressure on interest rates, at least in India, and also to a certain extent in the world, will not be as sharp as has been, and there will be a tapering off, which means that for the full next year, are we expecting interest rates to go up? The answer is no. There's a possibility that they may come down. Growth concerns will hit the world. And if that be so, then it will be reflected in the returns from that asset class. As far as equity is concerned, I've already indicated that we are very positive on equity for next year as well as the years to come. And as far as real estate is concerned, I think that it's been not the best of asset classes over the last 5-10 years. I don't see any change in that. I think that real estate will at best give lukewarm kind of returns.
Okay. Very interestingly, I'm just reading out Mr. Feroz Aziz's statement also in your press release, where he says that the net flows for 9 months of FY23 stood at 3715 crores, which is a growth of 94%, and the net flows in Q3 FY23 stood at 1241 crores, which is a growth of 74%, while at the industry level, the net flows of both equity mutual funds have degrown by 55% in Q3 and by 3% in the 9 months ended financial year 2023. Could you help us understand if this could be sustainable at this level, and what really helped you clock in this kind of a growth?
Well, if you ask me, 90% growth is sustainable. My big answer is a no. But yes, to get 20-25% growth in assets year on year is sustainable.
Okay. And lastly, Mr. Rawal, if you could just help give advice through our platform to both Anand Rathi Wealth investors and to the mutual fund investors at large for 2023 as to how should they be approaching the investments?
Well, it's difficult to sort of give advice, which is sort of generic. But my belief is that a person advice is a offshoot of your objective. Yeah. So if your objective is 7% return, there are lovely debt funds that you can do. If your objective is 12, 13, 14% return, there is no getting away from equity, right? And is that a reasonable objective to have, 12 to 14% in a economy like India, which is growing at 6, 8% over the next 1 year, 2 years, 5 years? To my mind, it's reasonable, and therefore, if you pursue 12 to 14, there is no getting away from equity and be in equity.
Sure. Okay. Well, on that note, thank you so much, Mr. Rawal, for speaking to us and sharing with us all the insights about this quarter. And here's wishing you all the very best for the coming quarters. Looking forward to more interactions to really understand more about your own business and the outlook for the entire mutual fund industry space as well. Many thanks for joining in onto this special.
Thank you. Thank you, Sakshi, for having us. And you have a lovely evening.
Thank you so much. Wish you the same. And with that, we wrap up this special edition of Market Today as well. Earnings special, Anand Rathi Wealth clocking in good set of numbers for Q3 FY23. Also looking to up their guidance going forward for FY23 as well. They are hopeful of maintaining the growth at this level, at this pace as well on most of the parameters that they have just spoken about in terms of top line, bottom line, and from the earnings per share perspective as well. With that, we wrap up this edition. Many thanks for joining in, but do stay tuned on to Business Today TV. Don't forget to subscribe to this YouTube channel and also stay engaged with us via our other social media platforms, Facebook, Twitter, LinkedIn and Instagram. Many thanks for tuning in.
If you like the video, do like, comment, share and subscribe.